Credit cards are a good option for high school and college students, which helps them to carry out numerous basic transactions like hotel and airline reservations, and shopping on the internet. Nowadays, most parents want their college-going children to have a credit card, which would help them in case of an emergency. Despite all the criticism about student credit cards, it provides an opportunity for students to learn more about credit scores and their importance. However, before applying, one should be sure of his abilities to pay off the card each month. Parents are required to assist their child for co-signing for a student credit card, and they should make sure that the cards are used properly. There are various benefits of credit cards meant for college students. These benefits include non-requirement of income, lost wallet services, credit education tools, etc. The most important benefit of these deals is that banks are generally lenient with young people with limited credit histories. In addition to these facilities, there are rewards and perks given for student lifestyles, and also benefits like 0% introductory interest rates. Rewards and cashback are also offered. If one wants to earn rewards, he should check out the card instructions carefully, as these cards generally carry higher interest rates. Sometimes, it is also possible that the student with a credit card is liable for rewards if he falls into the category of consumers who pay off the cards each month. One can also check out for a card with cashback rewards or inquire the bank about the kind of reward cards they offer. Here are some points college students should know about the credit cards. Understand the credit scores. Credit score is a record of one's credibility and depends on how timely he pays back the money he borrowed. It is stored at a credit bureau and improves if one makes timely payments. Events such as late payments, incomplete or partial payments and defaults affect the credit scores negatively. Credit scores depend around 35% on one's payment history, 30% on his outstanding debt, 15% on the length of his credit history, 10% on the recent inquiries on credit report, and 10% on the types of credit in use. Look out for a card with low APR. An interest rate APR, or the annual percentage rate, APR, describes the annualized rate of interest rather than just a monthly fee or rate, as applied on a loan, credit card, etc. Before deciding on a credit card, students should always check out the APR imposed on the usage of the card. It is advisable to buy a card with low APR, in order to avoid deferrals. Spend prudently. Once the formalities are completed and the card is received by the student, he is often tempted to spend more than what he can afford to pay the next month. Such temptations should be avoided and the money should be spent prudently so that the credit history and scores are not ruined. Good credit scores and report are very important for financial freedom in the modern world, as well as for applying loans in the future. They also help in every major purchase from cars to houses. Student credit is often a misunderstood aspect of personal finance, but it is the first step for building one's credit history and entering the habit of paying off the bills each month, earning some free gifts through the various credit card offers.